Today we are going to talk about a beginner's guide to invest in precious metals. Gold and silver has been recognized as a valuable metal and were roughly highly connoted by ancient civilization. Precious metals still have their places in a savvy investor's portfolio in modern times. But one precious metal is best for investment purpose, and more importantly, why are they so volatile? There are many ways to buy precious metal like gold, silver, platinum, and a host of good reasons, and why you should give in the treasure hunt. So, if you are just getting started out in precious metals, read on how to learn and more about and how they work. So we are going to talk about each and every precious metal in detail. Precious metal number one is gold. We will start with the granddaddy of them all. Gold is unique for its durability, malleability, and ability to conduct both heat and electricity. It has some industrial application in dentistry and electronics, but we all know that a principle as a base for jewelry and a form of currency. It is valuable is determined by the market 24 hours a day, 7 days a week. Gold trade is a function of sentiments. Its price is less affected by the law of supply and demand. This is because a new mine supply is vastly overweighted by the sheer size of above ground hoard gold. To put it simply, when holders try like selling and price drops, when they want to buy a new supply is quickly aborted and good prices are driven higher. Several factors account for increased desire to hoard the shiny yellow metal. Number one is systematic financial concern. When banks and money are preserved as unstable and political stability is questionable, gold has been often touted as safe store of value. Inflation. When a real rate of return is equity and bonds or real estate markets are negative, people usually fork and gold as an asset that still maintain its value. Number three is war or political crisis. Conflict and political upheaval has been always sent people into gold hoarding mode. An entire lifetime worth of saving can be made portable and stored until it's need to be traded for foodstuff, shelter, safe passage to a less dangerous destinations. The second precious metal is silver. Unlike gold, the price of silver swings between its perceived role as a store of value and its role as an industrial metal. For this reason, price inflation is this market as more volatile than its market of gold. And silver roughly trade is aligned with gold and as an item to be hoarded. The industrial supply demand equation for the metal exerts as an equally strong inflation on its price. The equation has always fluctuated with new innovation, including silver once predominated role in the photography industry. Silver-based photographic films has been eclipsed by the advent of the digital camera. The rise of a vast middle-class emerging market economical of the East created an explosive demand for electric appliances, medical products, and other industrial items that require silver inputs. For adhering to the electrical connection, silver's properties made it desirable commodity. The use of silver in batteries, superconductors, application, and micro-circuit markets. It's unclear whether to what extent these deployment will affect overall non-investment demand for silver. One fact remains: silver price is affected by its application. It is not in old-fashioned worldwide as a store of value. Number 3. Platinum. Like gold and silver, platinum trade around the clock on global commodities market. It often tends to fetch higher prices than gold during the routine periods of the market and political stability simply because it's much rare. Far less of the metal is actually pulled from the ground annually. There are also other factors that determine platinum price. Like silver, platinum is considered as an industrial metal. The greatest demand for platinum comes from the automotive catalyst, which can be used to reduce a handful of emissions. After this, jewelry accounts for a majority of demand. Petrochemicals and chemical refinery catalysts and the computer industry uses up the rest. Platinum prices are influenced heavily by the global condition in the countries where mining takes place, as well as the supply and demand equation. In this respect, price has been determined in large part by auto sales and production numbers. The drop in vehicle production and cultivated demand for the auto catalyst, which accounts for one third of the platinum demand. During the COVID-19 pandemic, pushed price down. Supplies dropped by 5% and demand increased by 21% during the first quarter of the 2021, primarily driven by the automotive industry, which led to an upward trick for the metal price. Demand in 2022 also increased it, but by a marginal 2%. Keep in mind though that the rise is non-emission vehicle could put pressure on price. Platinum mines are heavily concentrated by other two countries like South Africa and Russia. The creators greatly potential for the cartel-like action that would support or even artificially raise platinum price. Investors could consider that all of these factors favor to make the platinum the most volatile metals of all. Number 4 on the list is palladium. Lesser known as the three metal mentioned above is palladium, which has more industrial uses. Palladium is a shiny silvery metal used in many types of manufacturing processing, particularly for electronics and industrial products. It also been used in dentistry, medical, chemical applications, and jewelry and groundwater treatment. A majority of worldwide supply of rare metal, which has the atomic number 46 on the periodic table of elements, comes from mines located in the United States, Russia, South Africa, Zimbabwe, Canada, Australia, and Finland. Jewelers first incorporated palladium in the jewelry in 1939. When mixed with yellow gold, they allow forms of metal stronger than white gold. In 1967, the government of Tonga issued circulating palladium coins toasting the coronation of King Taufa Ahu IV. This is the first record instance of palladium used in coinage. The metal worker can create a sheet of palladium down to 1 to 250,000 of an inch. Pure palladium is malleable, but it becomes stronger and harder. Once someone works with the metal at room temperature, the sheet can be used in applications like solar energy and fuel cell. The largest industrial use of palladium is in catalyst converted because the metal serves as a great catalyst that speeds up chemical reaction. This shiny metal is 12.6% harder than platinum, making the element also more durable than platinum. Now we will talk about how can we fill up our treasure chest. Let's take a look on the options available for those who want to invest in precious metals. Number one is commodity exchange trade funds. ETFs are also a convenient and liquid means of purchasing and selling gold, silver, palladium, platinum. Invest in ETFs also doesn't give you access to the physical commodity, so you don't have to claim on the metal in the funds. You will not get the actual delivery of a gold bar or silver coins. Number two is common stocks and mutual funds. Share of the price metal miners are leveraged to price movement in the precious metal unless you are aware of how mining stocks are valued. It may be wiser to stick to the fund managed with solid performance record. Number three is future and options. The future and option market offer liquidity and leverage to investors who want to make big bets on metals. The great potential profit and losers can be had with the deviation of the product. Number four is bullion. Coins and bars are strictly for those who have a place to put them, like a safe deposit box or safe. Certainly for those who are expecting the worst, bullion is the only option for the investors with a time horizon. Bullion is a liquid and downfall bottom line to hold. Number 5 is certificates. Certificates offer investors all the benefits of physical gold ownership without the hassle of the transportation storage. They said that if you are looking for insurance in a real disaster, certificates are just paper. Don't expect anyone to take them in exchange for anything of the value. Now we are going to talk about, are precious metal a good investment? Precious metal offers unique inflammatory protection. They have instinct value, carry no credit risk, and cannot be inflated. That means that you can print more of them. That also offers genuine appeal insurance against a financial or political military upheavals. From an investment theory standpoint, precious metal also provide a lower negative correlation to other assets class like stocks and bonds. This means even a small percentage of precious metal in a portfolio will reduce both volatility and risk. So what are precious metal risks? Every investment comes with its own set of risks. Although they come with a certain degree of security, that there always come risks that come with investment in precious metal. Price for metals can drop due to its technical imbalance, more seller than buying. The changes in supply and demand, geopolitical issues, and other related factors. That said, during the time of economic certainty, sellers benefits as the price tend to shoot up. So what are the benefits of investing precious metal over stocks? Investing in precious metals comes with some benefits over stocks, like such as being as a hedge against inflation, having instinct value, no credit risk, a high level of liquidity, bringing diversity to a portfolio, and ease of purchasing. What are the best way to invest in precious metal? The best way to invest in precious metal is either to buy the metal outright and hold a physical form, out to purchase ETFs and have significant exposure to metal, or companies involved in the precious metal businesses. What is the disadvantage of investing in precious metal? Precious metal has no cash flow, as no individual will receive no income if an individual holds upright metal. There is also storage cost associated with the investments. The bottom line of today's video is precious metal provide a useful and effective means of diversification to our portfolio. The trick to achieve success with them is to know how to goal and risk profile before jumping in. The volatility of precious metal can be harnessed to accumulate wealth. Left unchecked, it can be also led to ruin your portfolio.